Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
One thing that I find interesting about currencies and the market in general, especially in this time frame that we're in right now, this market, it's a very scary market, no doubt about it. But from a lot of the people that we talk to, this can be a trader's paradise from the short-term side of it. If you have the stomach for short-term trading in this marketplace, this has been a great market for a lot of people. In terms of the longer-term stock market bulls, obviously this has been a terrible market. But what we want to talk about are some ways with which you can find potential opportunities based not only on the stock market, but having kind of an open mind to looking at other markets if you don't want a specific correlation. Now let's take a look at the S&P 500 versus the Euro FX, which would be EUI. Now we can see in here going from left to right on this graph, and this is from May of 07, about the time that the ISE options came out until recently. If you look at this, it's difficult to find a correlation on here, either to the upside or to the downside, an inverse correlation or a correlation to it. And believe me, I played around with this for several hours trying to find some type of a correlation at some point in time, but there really was not one, at least from the short-term standpoint. What's interesting, though, is what's happening recently. Right now, we're at a point in time to where we're at an unprecedented time in our market history based on what's going on with the banks. Now, we're about at 50% retracement right now in the S&P 500 over from the all-time highs last October. You can even see that on this chart. What's interesting is how people are fleeing to the dollar lately. The U.S. dollar is becoming a lot stronger now than it was 6 months ago. Now, one of the theories on this is that we're in a global economic crisis, no doubt about it. This is something that's happening worldwide. This is not unique to the United States alone. This is something that's going on worldwide. But what a lot of people believe is, one of the theories out there is that because the United States has the strongest currency in terms of, in case something really, really bad happens, people have been fleeing to the U.S. dollar. And the theory behind that is because we have the strongest military power in the world, this would arguably be the safest place to be. Even though we have a lot of debt, and even though you can make a case that the economic times aren't the greatest in the United States right now, this is still where people have wanted to be during the times of trouble. So with this, the point that I want to make with that is we can see how the blue line becomes higher, which is the U.S. dollar, or EUI, and the red line is going lower, which is the stock market. I wouldn't read into this as a correlation because I know I'm going to shock people when I say this. This is really quite a turbulent marketplace that we're in right now. Now, what products are available to be traded with this? Now, I want to show how you can analyze this on some live charts here in a moment. But we have EUI. EUI is the one we've been using all night. This is the dollar versus the euro times 100. As you're trading this product, the way to think about this is let's just say theoretically that we see here on the screenshot from the ISE that the U.S. dollar euro EUI is priced at 79.44. From a dollar amount standpoint, that would be like trading a stock that is priced at $79.44. So one call option essentially gives you the right to control $7,944 essentially. So that's the way that you can kind of do the math on these. Below that we see the US dollar yen, and that works a little bit different because the yen it's just priced a little bit different from that standpoint. Instead of the one thing instead of 100 it's 1, because if you actually look at yen, you'll deal in 20,000 yen equals just a few US dollars. I mean, it's not that extreme, obviously, but it's priced a lot more unique than other currencies throughout the world. So the ISE tries to make this as simple as they can. And the same concept, if you were to do the US dollar yen, it would be like buying, the underlying would be $95.94, as we can see from this screenshot. And you can see the others below. You multiply everything by 100, and an easy way of viewing this is just as if it were a stock price. Of course, below we have the British pound, Swiss franc, Canadian dollar, as well as the Aussie dollar. Now, this is an email address, and I'll flash this up again at the end of the presentation if you guys would like to do it, if you have further questions from what we talked about. But right now, I'm going to bring up the OptionsXpress website because I want to show a couple things from a live standpoint here. So just give me a moment here, and we will get that up. Okay, right now everybody should be seeing EUI on a chart right now for the OptionsXpress website.
We are, Mike. Perfect.
Okay, just wanted to make sure of that. Let me just get everything set up here. Okay, what this is, I'm logged into an account, and you're not going to see any positions anyway, but in case you did for some reason accidentally, don't read anything into them. This is just not intended to be a recommendation or anything like that. But this is what we call our flex charts. And this is a chart of EUI. It says 2 years, but the EUI, this underlying, has been around since around May of 07. So what this is the U.S. dollar versus the euro. And we can see how the dollar has performed, and then even recently. Some things that we want to compare on this. Now, Steve and I have talked a little bit about what we wanted to show on this, but one of the main things we want to show is the stock market in general. So let's bring up a comparison chart on this, and let's actually bring up the S&P 500 for starters. And let's bring up the spiders, ticker symbol SPY. Okay, and the spiders are actually the ETF that tracks the S&P 500. So we can see on this not a lot of correlation just as we look at this going back and forth and up and down throughout time, but we do see the break recently, and we had already discussed this. Let's look at some individual stocks. First one that we'd like to show on this would be Google. Now, one thing, and the reason that I'm showing Google, we're going to take a look at Apple as well as Microsoft, but the reason I want to show Google is in years past, one thing that commodity brokers had always done as a way of getting people to trade futures, and I don't have any problem with futures, don't get me wrong, is they would approach technology companies and they would talk to them about hedging themselves on the currency side of it. Well, I think there's something that you can do with that, and that kind of works to a point, but looking at this even on the individual side of it, let's take a look at the dollar versus Google. We can see that we're definitely going down a little bit in the dollar side of it here, but Google's skyrocketing. This is back when Google was up around the, excuse me, well above the $600 level. We can see them having a little bit of a convergence, but what's interesting right here is, I accidentally clicked the wrong button, sorry. What's interesting here is that we have a little bit of a cross. We can see how right in here, the dollar's going up, but Google is going down, just like the stock market. So on this, we're still not seeing that much of a correlation from the standpoint of Google versus the market either. Now, let's take a look at some other currencies. Let's take a look at the Aussie dollar. Now what I did is I typed in AUX. What we can see here, the blue line is representative of the Aussie dollar itself, but even in Australia, we still aren't seeing much of a correlation from this standpoint. We're a little bit downward, we're a little bit upward, and then we have a little bit of a break right in this area. Once again, though, what is a little bit interesting, though, is that this bit of divergence happened sooner on the Australian dollar as opposed to what it did on the euro. Now, let's take a look at the yen. Now, once again, this is the dollar versus the yen. So right in here, what we're seeing, not much of a correlation, still not too much of a correlation, a little bit of an inverse correlation, but then it comes down, it meets it, then Google goes up, and then we can see right in here how the dollar itself, and once again, the dollar is represented, the dollar is the blue line, but the dollar is actually going down in this case because the yen's actually had a little bit of strength in it.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.